Yo, 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 what's up? It's Antoine Small's Financial Blueprint. I'm so happy that you guys are tuning in to episode number 2 for this this wealth, riches, and money series that we just started last week. This is a 10-part series that we're discussing different things when it comes to wealth, money, and our riches specifically, right? So today we're talking about why does the rich get richer, right? It's important that we have the conversation, that we have the information to understand how the rich get richer. Most of the time, what I hear out here on social media and things like that is a lot of complaining about, how the rich continues to make money and continue to grow their wealth and continue to get more money, more power. You know what I'm saying? So more influence. And what I like to do is I like to take wisdom, knowledge, information from people that actually do what I desire to do and ultimately what I want to do long term. I don't complain about much of anything. I just look at the game and I say, okay, how can we learn the game? How can we then apply those things to impact our lives, right? Because the goal in the end for us is to succeed, right? It's to win. If you look at a previous video I made, winning is the only thing that matters, right? Winning is the only thing that matters. So today we're going to deep dive into this discussion. We're going to have some information. We're going to bring some videos up and we're going to review those videos. And what I want to do now is before we get started, we're going to take a look at what I would deem as someone that has significantly impacted my life, not personally by any means, but most of us know the author for Rich Dad Poor Dad, right? And that book significantly changed my mindset when I was around 16, 17 years old, right? I read Rich Dad Poor Dad when I was 16, 17 years old in high school. And it really changed my mindset on the world of finances, right? Someone that's coming from Philadelphia, born and raised, and I didn't have a ton growing up. My parents didn't have a ton of money. The community that I was around really didn't have anything, right? So being someone that was really good at math, right? I was excellent at math, always interested in numbers, always interested in money, finances, etc. It was always something that intrigued me, right? So being that I read that book and then I got into the cash flow quadrant and we dove a little bit more into asset values and gold versus fiat currency. And when I started to really do a lot of more research, it really impacted my life in a positive way. So before we get started, we are going to take a look at this video by none other than the author of Rich Dad Poor Dad, Robert Kiyosaki. And we're going to take a quick second and listen to his quick video about why the rich get richer and thinking like a poor person. Let's go into it.
Get rich if you think like a poor person. And we all know poor people. They're all over the place. So I'm going to just show you something here. This here is a gold Rolex Daytona. The younger people have no idea what Daytona means, but this was Paul Newman's watch and all this stuff. And I own 4 Daytonas. They go, oh, what a waste of money. That's how a poor person thinks. Why do I buy a $50,000 watch, let's say it is, and gold rings and all this? Well, the reason is because the national debt of America is through the frickin' roof. We're going bankrupt. The way America, with our politicians, the way they solve their problems is they print money. One thing wrong with printing money: the rich get richer and the poor middle class get poorer. Gresham's law says when bad money enters the system, good money goes into hiding. So here's a 50-cent piece. Kennedy, $50, 1964. This is from my friend Jim Clark at Republic Monetary Exchange here in Phoenix, Arizona. I buy a lot of real gold and silver from him. So when bad money enters a system, which is the bad money, this or this? See, Gresham's law says when bad money enters a system, good money goes into hiding. This is bad money. This is real money. So what happens is when I show this to most people say, which one? I said, which one do you want? The $10 or the 50-cent piece? The average person, young or old, jumps for this. But this is bad money. The smart want real money. And the reason this happens is every time the government prints money, it started in 1971 when Nixon took the dollar off the gold standard. Every time you print money, the rich get richer. Let me say it again. When you print money, governments print money, which are printing all over the world today, the rich are getting richer because assets go up in value. What else goes up in price are food, eggs, and stuff like this. So the rich get richer because they have real money, but the poor and middle class get hammered because inflation's killing them. So you look at America today, we have an election coming up for the president, and what's happening is inflation is killing people right now. This is takes more and more of these to buy one of these here. So you understand Gresham's law. When bad money enters the system, this is bad money, this goes into hiding. So Republic Monetary Exchange, here in Phoenix, this is in hiding. This 50-cent piece is worth a lot more than this. So when we're talking about why do I buy assets, why do I buy real estate? Because when I use debt is this fake money here. To buy a house, this goes down in value, but the house goes up in value. So that's why the smart people know how to use debt to get richer, because they use debt to buy real assets, and this gets worth less and less and less and less and less. It's Gresham's law. When bad money enters the system, good money goes into hiding. When bad money enters the system, the rich buy more assets like real estate, land, things like this. So they get richer, and the poor and middle class get poor because inflation kills them. That's Gresham's law. It's been around for thousands of years. So I hold this up here, 1964 real silver, and this. I say, which would you rather have, this 50-cent piece or the $10? The rich will take this. Poor middle class will take this. Let me explain this. When you print money, the price of assets go up. Like my apartment houses go up, the price of oil goes up, and things like this. So what happens is you print money, the price of oil goes up, but so does the cost of a chicken, because a chicken takes gas to get it to the supermarket. So you go to the supermarket, why is this chicken $10 today, whatever it is? I don't pay attention to that stuff. But we're printing so much money. Today, this here, the solid gold watch, I've been buying gold since it was $50 an ounce. That's why I own gold mines. I don't like to fool around with too much stuff. I have real gold. I can take it, I can feel it. It's in a private vault hidden in some mountain not too far from here. But the reason why I buy this gold watch, let's say it costs $50,000. 5 years from now, what will this gold watch be worth?
So let's stop there for a second, right? And what I like to do is take portions of the conversation and then make it practical, right? It's important that we understand the breakdown of the things that he just said. And I'm gonna break it down into four different categories when it comes to um the mindset of wealthy individuals, right? Wealthy people. And the goal in the end of this is for you to develop and transform, if you need to, your mindset when it comes to how you operate on a day to day, month to month, quarter by quarter, year by year basis, right? First and foremost, the thing that he said was when the government prints money, assets go up in value. Let's unpack that, right? Now we understand that the United States government tends to usually get involved when it comes to bad business or bad decision making when it comes to different things, right? So they pour money into the market. We're going to give, we're going to give, we're going to give, we're going to print money, print money, print money. The issue with printing money is the value of that money then goes down because you're just printing. It's just a piece of paper, really. It's not backed by anything. Where it used to be backed by gold on the gold standard, we're no longer on the gold standard. We haven't been in about 30, 40, about 50 years now. So that's no longer a thing, right? Gold, being on the gold standard from the United States perspective, is no longer a thing. But what's important is cash in the US dollar is not nearly as important as you think it is. I'm gonna repeat that again, right? Cash in the US dollar is not nearly as important. And I'm talking about the piece of paper. we, or people, it's not even we anymore, but y'all or others love cash to the standpoint that it hinders your ability to grow wealth because you want to be cash rich. When wealthy don't want to be cash rich, they want to be cash poor. They want to be asset rich. There is a difference. Ownership and assets, and what Robert was talking about was how owning real estate, owning stocks, owning gold, owning businesses, owning assets is ultimately the mindset on how wealthy people think, not about cash. Right? And we're going to get into another video later on where we actually deep dive into Elon Musk, and it breaks down how Elon doesn't even care about income. He doesn't care about money per se when it comes to how much money he's generating when it comes to his annual salary. It's not important to him. And we're going to deep dive into the reason why that's the case. And it's fascinating because it's a language that we don't understand, or I keep saying we, that y'all don't understand, that others don't understand, because this education was not provided to everybody. It's not taught in schools, right? It's not taught in certain type of industries. It's only really been pushed in the community of wealth. So you have an opportunity now to learn these things and then apply them while also then teaching them to your children to ultimately benefit you long term. All right. So money is a tool, is not the goal. Money is a tool. It is not the goal, right? Wealthy people see money as a vehicle to create opportunities, not something to spend. When we get paid, you should think about money as a opportunity to grow wealth and not to spend it on something that you ultimately, it's not an asset, it's a liability. So every time you get paid and you want to go buy something from the store, you're only helping the store owner, because the store owner is then making revenue and ultimately then making profit on your money that you worked hard for, right? You're not actually growing it in any type of way towards any asset or any business or any opportunity that's ultimately going to make you more money long term, right? So that's number one. The money that you do make, the income that you do make, you need to look at it from an opportunity standpoint. I was having this conversation with a young lady the other day about how you got to create an army of soldiers fighting for your future success. And the more soldiers you have fighting, and soldiers from the standpoint that I'm in the military, but soldiers mean from the standpoint that those people or those dollars, that money is then ultimately building asset value and generating money for you in a passive way to where then you can grow wealth, not just by passive income, but also in asset appreciation over a long time. Right. So money has to be used as a tool, right? Not a goal. Being cash rich is not the goal here. Asset rich is the goal, not cash rich. So money has to be used as a tool, right? Number two, focus on assets, not income. So we have to get into a place where we think about how can I accumulate more assets? Not how I can make more money. You can do both, but again, the thought process is when I receive money, how can I build assets? I receive more money, I build in more assets. And it can be a slow process for some of us that don't make a ton of money, but over time, the money that you generate, the assets then continue to build. The assets then bring you passive income, which then can make you more income. The more income you get, the more assets you build, the more money you make. And then long-term wealth builds by appreciating assets over a long period of time. Right? We get money, we build assets. All right. So, number 3, long-term mindset. You have to think long-term. Wealth is not built over a short period of time. It's built over years and years and years of consistency and discipline. So again, if I'm making money, and I'm not disciplined and I'm not consistent, then I'm not then going to buy the assets consistently, which then is going to impact me and I'm not going to make nearly as much money as I could have, nor am I going to have enough assets to be able to live off my lifestyle long term. So the long-term mindset, the thought process has to be always considering the fact that I get paid, build assets. I get paid, build assets. Consistency, discipline, year after year, paycheck after paycheck, month after month, quarter after quarter, year after year. This is a 10, 20, 30, 40-year thought process, right? So how do other wealthy individuals think? This Robert Kiyosaki is basically telling you. He bought a Rolex for $50,000. Some of us will look at that as why would he buy a $50,000 Rolex? Well, is Rolex an asset? Absolutely. Why? Because Rolexes are one item. There are not many items out here, but Rolexes are one item that appreciates in value over time. So was it better for him to buy a car or to buy a Rolex? Someone put it in the chat. Was it better for Robert Kiyosaki to buy a Rolex or buy a car? A car is a depreciating asset. So buying a car, which depreciates at 20, 30, 40% when you drive it off the lot, sure, that car might look good and you might ultimately look good. You might look like you got money, but that Rolex that's sitting there on that man's wrist at $50,000 in 10 years is going to be valued over 60. It's going to be valued over 70,000. So as that watch sits, it's accumulating value over the long term, right? So it's important for us to understand, right, how the mindset works, because mindset then actions then follow. If you don't understand or have the mindset, then your actions will follow in a good way or a bad way, right? So the last one, number 4, is leverage, not labor. We have to get out of the mindset that we think that we got to work harder to ultimately build wealth. That's not true. That's not true. And like, we're going to get into Elon and we're going to have a conversation about how he operates when it comes to his moves on what he does when it comes to his income. But it's very important that you understand that working harder doesn't necessarily mean that you're moving in a direction that's ultimately going to make you more money, right? If you have the wrong mindset, if you don't make the right actionable steps, if you don't do the things that we just talked about when it comes to building assets with income, and you just want to live a really richly visual lifestyle instead of something that's really built on like consistent discipline moves that's going to ultimately, lead you to prosperity long term, then none of it matters. It's just for show, right? Warren Buffett is a prime example. Warren Buffett bought businesses instead of clocking into a job. Instead of him thinking, I'm going to work more, he said, no, I'm actually going to purchase businesses that's going to make me income, which then I'm not actually working for anything. I'm just sitting here as the owner and collecting income. I'm collecting revenue. So if you are I'm gonna just break this practically. Let's say that I got a guy that let's say you got a barber, he cut hair, and you want to grow money, you want to grow revenue. I would argue, why would you not just own a shop? Be the owner of the shop, right? Because then if I'm the owner of the shop, do I need to cut hair more? Sure, you might have to start off getting clientele. You might have to start off getting some good barbers. You might have to start off growing that business from an internal standpoint. That means you're going to work a little bit, but ultimately, long term, what you want to do is you want more barbers, you want more clientele, you want the visuals, you want the vibe, you want everything to be good to ultimately bring people in so that you can not have to work. While then the barbers are giving you rent checks and ultimately you making money. So owning a business, right? Building businesses, thinking about how you can then leverage the business to bring you more money, not necessarily working harder, right? How can I leverage money to buy rental properties so that rental properties can then bring me income, which means that I don't necessarily need to work 60, 70, 80 hours because I got rental income coming from multiple rental properties to where then that can support my lifestyle. So again, mindset, how we think, actionable steps are what we do, then follows, right? If you liking this content, please hit the subscribe button. Hit the like button, subscribe to the channel, share this with someone who needs to hear it. We're going to continue to rock out, right? So we are now going to transition to Elon, and we're going to talk about how this young man, he ain't young no more, but this young man created a billionaire and ultimately on his way to being a trillionaire based on the fact that he just understands how to leverage money. And we're going to talk more about how the rich continues to get richer. And, we're going to pull that out. But what's important here is we don't need to argue about other individuals that we may not like in the industry. I do not care about if someone is a good person or not. That person doesn't affect my life. What I do care about is what does that person do to grow his portfolio, and how can I learn from that person to then be able to do it myself. I don't have time sitting around talking about people and how I might not like people. I don't care. I say, okay, how did he do that? How did he do that? When we start talking about taxes and we want to complain about how Jeff Bezos and Donald Trump and all these billionaires, they don't pay taxes. Okay, they don't pay taxes. How can you pay less taxes? How about we start with that conversation? How can we leverage businesses? How can we leverage real estate? How can we leverage our situation to then understand how to pay less taxes? Learn the tax code. It's really not that hard. But a lot of times we sit around and we just complain. We complain and complain and complain, right? So let's get into it. Let's get into Elon. Let's get into how the rich continues to get richer. And let's continue to have a conversation. Let's go into it right now.
Elon Musk is on track to become the world's first trillionaire by 2027. Musk is the closest person to the 13-figure mark.
The biggest driver of Elon Musk's wealth has been Tesla stock. If you look before the pandemic, that stock was trading at below $50 a share. Now it's at $230 a share. Some people think it could easily go to $300 a share if they have self-driving taxis, autonomous vehicles.
But not all Americans benefit from stock market plays. Wealth inequality in the U.S. has significantly increased over the past 30 years. Federal Reserve data shows the wealth of the top 1% has grown dramatically, while the wealth of the bottom 50% has stagnated. In the early 1990s, the top 1% held about $4.76 trillion, or 23% of the nation's wealth, while the bottom 50% had about $730 billion in equity, or 3.5% of total wealth. Fast forward to Q1 2024, the top 1% share increased to nearly $46.1 trillion, or 30% of the total wealth, while the bottom 50% held $3.78 trillion, or 2.5% of total wealth.
The American system, which is an economy fundamentally driven by entrepreneurs and innovation, where you're rewarded for taking risks, that creates growth for everybody.
While others feel that wealth concentration can be harmful to society.
So talk of a trillionaire is frightening. Billions of dollars of wealth translate into billions of dollars of power.
100 years after the first billionaire, what has led to the concentration of wealth that could make the first trillionaire possible? And what does it mean for the U.S. economy?
So real quick, I keep being told by other people that I know that the stock market's it's just not a good investment. The stock market is not a good place for your money, you're gonna lose money. That's why I keep being told. I talk to many people about this topic, and people tell me, "Oh, the stock market, you're not gonna make no money in the stock market," and I'm like, "Oh, really?" Because it's actually a fact that over the last, if you go back 75 years, if you go back 50 years, and you can put it in Google, you can put it in AI, you can do what you want. Ultimately, you can go back and do the research and ask, hey, on average, how much does the S&P 500 go up annually over the last 50 years? How much on average has the S&P 500 gone up annually over the last 75 years? And I can tell you that it's going to tell you that on average, the S&P 500 has gone up 8 to 12% annually on average, right? Because some years is better than others. On average, every year over the last 50 to 75 years. So when we have the conversation about wealth and we talk about growing in an asset, having an asset growth mindset, the easiest way that you can grow assets is stock ownership. I'm going to repeat that again. The easiest way for you to grow wealth is stock ownership. There was a time 20 years ago where you couldn't just go on your app on your phone or on your computer and sign up for a brokerage account and just start buying stocks. You had to actually do it from a paper standpoint and send in stock, requests, and then it had to be processed on a stock exchange. There wasn't an ability for you to just go buy stocks. Now you can go and download Robinhood app and Webull and go on Charles Schwab and Fidelity and all of these different ways nowadays that you can go and just buy stocks just off the 5 minutes. The easiest way to grow assets, to gain more assets and to grow wealth is the stock market. And on average, like we said, you can Google it right now. On average, right into your phone right now or to your computer. On average, how much does the stock market go up over the last 50 years in the United States? It'll tell you 8 to 12% on average. It might give you around 9%, 10 or 11%. But ultimately, in the end, it's almost a factual guarantee that you're going to make money in the stock market if you buy great companies at great prices and you think long term. This is not my opinion. This is just a fact. So when Elon becomes a trillionaire, billionaire, and then the world's first trillionaire, working towards it based on his stock portfolio and his ownership in Tesla and other companies, you ask yourself, how can I then do the same thing? It's not as hard as you think. Apply the same processes. Now, sure, you might not necessarily be able to own a business like Tesla and Starlink and Neuralink and do and X and some of these things, the SpaceX and all of these things that Elon does, but you can buy stocks. You can build a business. You can create an LLC. You can do the little things from your foxhole to where you can then apply little, disciplines to where you can see the numbers start accumulating over your lifespan. Do you need $1 trillion? Sure. No, you don't. But do you need 100,000? Yes. Do you need I would argue by the time you retire, you need about $2 million in assets to be able to live your life for the next 20, 30, 40 years. If you live that long, absolutely. So as we got through the mindset and we start talking about how do we apply those things, because we're looking at a trillionaire and how he does things, you need to apply them in your life day by day, week by week, month by month, year by year. So the first thing that you can do right now is buy stocks. Antoine, what stocks do I buy? The best companies in the world. It's not hard. You know who the best companies in the world is. You know this, right? This is not hard. What is the products that you buy every day? Do you know the one thing I see on the steps of everybody's house is packages. Where do those packages come from? Can somebody put it in the chat? Where is the packages coming from that's on your front step or your neighbor's front step this morning? It's not hard. Right? When you think about computers and technology, what companies create the computers, technology, the phones that we use, right? The billions of dollars that we spend on these phones. Who is the company that manufactures them? It's not hard. This is not a hard conversation. What stock should you be investing in is the businesses and the companies that ultimately lead the market forward and leave the United States forward long term. It's not that difficult. The difficult part is figuring out what price to buy them, not what company. So we should know 3 to 5 great companies to invest in. We should know. Then we need to do our research and deep dive into what stock, what's the price that I want to buy it at. The same way that you want to buy Jordans. Okay, what price do you want to buy those Jordans? Now, sure, Jordans is cool, but are you buying them at $300? Some people will. I'm not. But some people willing to buy them at the peak price. I'm just not willing to buy anything at peak prices. So once you know the companies that you want to buy, then you need to figure out at what price you want to buy. And I would argue that you should always, and I mean always, buy everything at a discount. Everything.
Elon Musk was named the richest man in the world in January 2021. He started 2020 worth about $28.5 billion and ended it being worth around $167 billion. As of September 2024, his net worth is valued at roughly $265 billion, according to the Bloomberg Billionaires Index.
One of the reasons that Elon Musk has grown so wealthy is not only because Tesla stock has gone up so rapidly, but also because the number of shares that he owns is growing rapidly. Over that 5-year period from 2019 to 2024, that stock went up 1,300%. If that stock continues to go up 100% a year along with his wealth, he will get to trillionaire status by 2027.
Tesla's stock rise during the pandemic wasn't necessarily tied to production or revenue growth alone.
The stock of Tesla is now up 677% for the year.
Hold on. Wait a minute. Listen. Y'all, people tell me that the stock market, you ain't going to make no money in the stock market. This chart tells you that you're wrong. And where can you go that you can make 670%? And you know what? This is an outlier. I don't want to put this up and make it seem like this is normal. It's not normal. But my point is, where can you go and make 676% of your money? If you got money parked in a savings account right now, I'm sorry. I would recommend that you consider investing some of that money. You can always take it out if you need it. That's why equities and stocks is a great thing to have, is because you can always sell that stock and take the money if you need it. Right? That's the difference between stocks and real estate. And we're going to get into real estate a little bit later. But buy stocks, make money long term. And if you look at what they said about Elon, the Tesla's stock went up 1,300% in 5 years. Think long term, 1,300% in 5 years. There is nowhere that you can go that you can make 1,300% in anything. Nothing, not even real estate is not going up 1,300% in 5 years. It's not happening. You cannot go anywhere and make that amount of money off of anything that you own anywhere. So, thinking like a wealthy person, rich individual, how they move is important. And this is just one of those examples of how owning assets, and in this case, stocks, can ultimately benefit you long term.
And that move has changed everything. Yet it only plans to make 500,000 cars this year. But this new generation of stock pickers, they believe that Elon Musk is a genius, and they want to stick with him as he takes over the world.
People invest for all kinds of reasons. Some invest for very short-term reasons. Other people invest because they think this stock is going to be a good one and it's going to generate profits for years and years and years.
Musk is in a unique position because of how he's compensated at Tesla.
Elon certainly had a lot of other shareholders, and his stake in the company was fairly low when they started out, but he has had these massive pay packages, the most recent of which was over $50 billion. That's $50 billion in pay, not just what he owns in the company and the value of that stock. And so in addition to growing rich from his existing stock, he has grown rich every year from options that are part of these massive pay packages. We have never seen pay packages like this in corporate America, where somebody is given, if they meet certain benchmarks, a $50 billion payday. And so that has actually grown his share of the company over time to 13%. Some say based on current options, he could get to 20%. So one of the things that helps him reach trillionaire status is that Tesla stock grows, but also his ownership of the company grows because of these massive and unprecedented options.
Neither Tesla nor SpaceX representatives responded to CNBC's request for comment.
Usually when we think about the Forbes 400, we think about them owning about 3 or 4% of the total wealth in the economy, which is already quite large and quite outsized, but this would be an order of magnitude difference for one individual. Whether or not it comes to fruition, I think depends on a lot of things happening, particularly what is the value of the businesses with which he has associated himself.
Musk made his wealth through equity in the major companies he's led, such as PayPal, Tesla, and SpaceX. This is a pretty typical wealth story for the 1%.
If you look at the list of the richest Americans, whether we're talking about Elon Musk or Jeff Bezos, the reason people get super rich is they start a company and they grow that company. And the reason that company keeps growing and growing is producing something valuable that people want.
Wealthier individuals typically have larger portions of their assets invested in the stock market, while middle-income households tend to have more of their wealth tied up in real estate.
That's a quick little difference between the two, right? They said the wealthy people, the wealthiest individuals have their money tied up in the stock market. Middle income households have their money tied into real estate. Right. So there's a little difference in why wealthy people, move in the way they move. Right. And we just talked about how over a 5-year period, Elon's shares in Tesla went up 1,300%. Now, sure, it came back down most recently, but over that period of time, it went up 1,300%. Again, there is no real estate. There is no house. There is nothing out here that's going to give you a 1,300% return in 5 years. Right. So there's a reason why wealthy individuals have a lot of their money tied into the stock market versus real estate. And I would argue in most cases, they have both. Right. So it's important that we understand these things. Right. So if I'm continuing to buy more real estate, I then also have to consider the fact that I need to put my money into the stock market. It should not be either one or the other. It should be both.
The wealthiest 1% of Americans own nearly 50% of all U.S. stocks, while the bottom 50% of Americans hold about 1% of all stocks as of mid-2024. About 58% of families own stock in 2022, either directly or indirectly through passive investments such as retirement accounts.
Wealth inequality is very much driven by the prices of different types of assets. And so one of the things that will cause wealth inequality to go up, as measured by wealth concentration, is the stock market. The stock market has done well, but other assets, especially housing, has also done quite well. House values go up. That tends to raise wealth in the middle of the distribution, which offsets some of the gains that are happening at the top.
Most Americans' wealth is in home ownership, with more than 66% of families owning their own home in 2022.
The typical American, if a median house price has gone up by 50% or 100% over the past 5-6 years, that's a lot of wealth that's being created. So when we talk about wealth distribution, that's going to be an offsetting factor.
But homeownership as a main source of wealth creation can be a double-edged sword. Although increasing house values can benefit homeowners, this trend also signifies decreasing house affordability for potential buyers. Many Americans primarily earn their income by trading their time and skills for a paycheck, which is then taxed based on how much the individual earns. On paper, the ultra-wealthy's income isn't quite as clear.
We think about income as being sort of the improvement in one's ability to spend over time. You and I have paychecks, and those paychecks measure how much we can spend. Musk has a gigantic compensation package, but even that package, only a fraction of it shows up as taxable income because much of it is in bonuses and other ways of getting paid that make it easy to avoid taxation.
Elon Musk has seen his fortune more than double over the past 5 years. What he does is he borrows against that $200 billion in equity, takes those loans and uses them for income. And so he has millions and millions of dollars in income that he never has to pay taxes on.
Oh, so we having a tax conversation. Oh, we just talked about leverage. We talked about how we can utilize leverage and how that can then benefit us in different ways, right? So Elon is an example of someone that does not necessarily take on income from his regular job as the owner and CEO of Tesla, for example, right? He takes in bonuses, and then he also takes the asset value of the company and the shares that he owns. He leveraged those shares to then take out loans from banks, right? So you got to understand that is not categorized as income because he took out leverage from equity ownership that he has in the company, then utilizes that as his ultimate income, which from a taxable, it's not taxable income. So leverage and then strategies on how we move, right, can impact taxes. Right, we know we buy real estate, we rent those real estate houses out. We have to fix up those houses. We have repairs and things like that. We have the depreciation when it comes to real estate. You got so many different avenues that you can then take to lower your tax burden. Right now, the income that you get from the rental property is obviously income. How you can leverage that property or those properties, if you can get multiples, can then impact you in taxes. And then obviously when it comes to business, and if you have a business and you have business expenses and you have those things, that can also help you lower your tax burden, right? So the strategies and the different ways you can go about doing things. Elon is just an example of someone that's very, very intelligent on how he moves, right? Understands the tax code, understands strategies. He most likely got people working for him telling him, hey, sir, this is how you do this is how you do that, to where you don't necessarily have taxable income. We're not going to complain about it. We're going to look at it, learn it, apply it, and execute. That's it. So for you need to understand the tax code in your state, how the IRS operates, how you can leverage business, how you can leverage real estate, how you can leverage different things, ultimately lower your tax burden, ultimately impact your personal situation and the situation of your family.
Over the past quarter century in particular, changes in tax policy have made it much more difficult to tax the rich. There are many more exclusions, many more ways to get around paying tax. Those same changes are what lead to a buildup in unrealized capital gains.
Capital gains are the profits someone makes once they sell an asset, such as stocks or real estate.
We should think about taxing unrealized gains and other policies like that. Many people, like Musk, are probably going to die with very substantial unrealized capital gains. And the question is, do we allow those unrealized capital gains to pass untaxed to the next generation, or do we impose something like a tax on gains at death? So I think we need to do a better job of taxing the income while it's being earned. And that involves changes in tax law and eliminating some of these loopholes that have been put in place over the past quarter century.
What assumption could be that it's only because of the tax code that these people got rich, which is absurd. They got rich because they built a company and spent a lot of time building that company. You have to create valuable products. That's why those people got rich, not because of the tax code. And any big change you make, you have to think, will that change the incentives in the system? So I would be careful making small changes.
It's not surprising that in this election cycle, the theme of taxing the wealthy and taking some of what they have to help those who have less has become very prominent, especially among Democrats and Vice President Harris. So one of the things that she has proposed is to tax what are called unrealized gains. And so what the Harris campaign has said is, look, it's not fair that because your wealth grows in value and you can borrow against that you never pay taxes, whereas the teacher, the firefighter, they have normal income and they have to pay taxes on it.
That was short-lived, and we know that that obviously did not work. There's no possible way that you're going to be able to tax unrealized gains. That doesn't even make sense, right? The tax specifically is to the ultimate like process of a gain that happens with a purchase or a sell, right? Or specifically a sell, right? When you sell an asset, you make income, then you pay taxes on that process, that sell, right? So you can't tax something that hasn't been sold yet. It just doesn't make sense. So we know that didn't pass when it came to the Democratic election and Vice President Harris looking to make that move. That didn't work.
Republican-controlled Congress passed the 2017 Tax Cuts and Jobs Act. The Tax Policy Center found that while the average American saved on taxes because of the legislation, the savings was disproportionate. A middle-income taxpayer saved about $900 by 2025, whereas the top 1% saved about $61,000.
We're going to be seeing the expiry of many provisions of President Trump's tax cuts for the rich and for corporations. That arrives in 2025. That's a huge opportunity to address the long-standing problems with our tax code.
We should also think about getting rid of loopholes that cause a disconnect between what someone is really earning, what their income is, and how much they're paying in tax. Because how much they're really earning, that's what determines how fast their wealth is going to grow.
All right, so that was an amazing, video, and it really spoke to Elon and some of the things that Elon Musk does when it comes to how he grew ultimately his wealth long term, right? And if you think about the breakdown, and let's just take this practically. Let's say an individual, comes from nothing. The individual understands that the market as a whole is in need of a product or service. And this is really how we get from start to finish, right? You have a product or service that's needed in the market. That individual then creates a business. And anybody can do this. Create a business. You see a lapse in the market. There's a product or service that's needed. And you create a business that then provides that product or service to the community, the country, the state that you live in, the county, etc. Right? You grow a business that's really profitable, that's really successful. You scale that business into being an amazing company, and ultimately, then you make it from a private company to a public. Right? That then public company then provides shares on the stock market for other people to buy. The value of your company doesn't just go up when it comes to the company and the revenue and everything like that, but it also goes up with people buying stocks and ownership in that company, right? So over time, you as a CEO and a business owner has the majority stake and the majority shares in that company. So every day the stock price goes up, the value of that company then goes up, which means that your wealth ultimately long term is rising at the same time. To where then you have multiple businesses, multiple companies, one private, a couple public companies. You sell PayPal, then you take that money and then you go buy another company and you reinvest it into more businesses and you grow your wealth organically from the standpoint that it is from the share price, it's from the success of the company, and ultimately long term, you benefit wholeheartedly from that. From start to finish, that's the pathway. From that standpoint, right? If we go about it a different way, and I say, if you're someone right now that has a regular job that's looking to grow wealth long term, and you're looking to do it in the stock market, build a portfolio, start with nothing, move every time you get paid, continue to be invested continuously over a period of time, choose 3 to 5 great companies and invest. Every week, every month, every quarter, every year for the next 30 years. Consistency, discipline is how you're going to do this. And the wealthy, as they continue to grow richer, you have an opportunity to do the same. If you want to go about it doing it using real estate, you can buy rental properties, rent those rental properties out. You can do short-term rentals if you want to. You can do long-term when it comes to having a tenant. You can then make passive income off of that, off of the money that you receive in real estate. You can then take that money and reinvest it into the stock market. You can take that money, reinvest it into another house, and you can then continue to reinvest your money over a long period of time into more assets and ultimately more income, build a business, and grow your assets long term. That's how you can do exactly what the wealthy do, and you can then apply it into your personal life to ultimately grow your situation and impact you in a positive way. Invest consistently into stocks, real estate, ETFs, businesses. Stocks, real estate, ETFs, businesses. And we have not even had a conversation about Bitcoin and crypto. That's just another way that you can grow your wealth, is leveraging the crypto. Very volatile, right? But long-term, crypto is something that you also can get into. When it comes to Bitcoin, Ethereum, Solana, XRP, things like that, you can really, take a portion of your income, 5%, 5 to 10%, put that into Bitcoin and allow that to grow long-term. Add that to your asset tree and the things that you can impact that will impact your life in a positive way long-term. Buy assets, build multiple streams of income. How can I make passive income on the side? How can I create another stream of income that can then impact me to help me grow and buy more assets? Last but not least, I say this all the time: think long term, think long term, think long term. Everything's a 5, 10 to 20 year outlook. Everything, including this channel. 5, 10, 20 year outlook. So when we recap, right, understand, why does the rich get richer? That's the question. Do we want to complain about it? I say no, we don't. Do we want to learn from it? Yes, we do. Do we want to take the knowledge, information, the actionable steps that we see that other wealthy individuals are doing on a daily basis and then apply those things to our life? Absolutely. That is how we move forward. That is how we progress ourselves forward. Right? Everything that you've seen today, Robert Kiyosaki talked about how, asset values go up when the market gets flooded with money. He talked about how being asset rich is ultimately most important and cash poor. We don't care about cash. Cash is not important, right? Kiyosaki talked about gold and the importance of gold versus the paper of the US dollar. I've been buying gold over the last 3-4 months. Gold is up over 15%. It went over 10% in a week. Been buying gold, right? You can buy gold digitally from a stock market perspective. You can buy gold, pieces physically, right? I'm buying digital gold currently at the moment, right? So you can utilize so many different asset classes to ultimately benefit you when it comes to your growth of your portfolio, right? Kiyosaki talked about how it's important for you to be a business-minded person. Think consistently, be disciplined. right? Going and buying things that really don't benefit you, a car, for example, or some some clothes, or like I say, Jordans or whatever you want to buy. Ultimately, if it's not an asset and it's a liability, then it doesn't benefit you long term. So again, income, buy assets. Then we went into Elon's video where it talks about how he created a billion and possibly trillionaire like situation for himself by owning multiple businesses, having stocks and ownership and in these businesses, and how he then leverages his business value over his asset value, equity value over time to leverage into to where he don't actually have taxable income. Right. And then we discussed taxes and how you can leverage your own business. You can leverage your own real estate. You can leverage your own situation to then impact you to where you can lower your tax burden. So how do the rich get richer is a game plan outlook on how we need to move to where we can then impact our lives in a positive way. That's what we need to do here. And that is why we here in Financial Blueprint, to give you the game. This is episode 2 of 10-part series. This is so much great information, man. I love you guys. I appreciate y'all. Right. We're going to be live tomorrow. We're going to be live tomorrow at around 3 p.m. Eastern Standard Time as we look a deep dive look into the stock market. If we do stock market live, we're going to do that tomorrow at 2:30 to 3 p.m. Eastern Standard Time, as we continue to dive into the stock market and to talk about all things stocks. Man, I appreciate y'all for tapping in with me on this second episode of this 2-part series in wealth, riches, and money. And I just continue to implore you guys to continue to tap into the channel. Please hit the like button, subscribe, leave me a comment, and share this with someone that needs to hear it. Love you guys. I appreciate y'all, man. This is Antoine Smalls, Financial Blueprint. I'm out. Peace.